While missiles were flying over the Strait of Hormuz, the markets were quietly minting more trillion-dollar companies in a single week than in any previous quarter in history. Let's take a quick pause and think. When was the last time war and all-time highs felt like the same story? 6 green days and a diplomatic twist. Let's start on Wall Street because this week was something else. The S&P 500 notched its 6th straight day of gains. 6 in a row. All-time highs. Earnings were strong. AI sentiment was through the roof. And a diplomatic development in the Middle East, more on this later, gave markets exactly the fuel they needed. Treasury yields dropped, the dollar softened. Basically, multiple macro indicators moved in a positive direction simultaneously. So, the economy is growing, though at a more moderate pace than expected. The one soft spot? Consumer confidence. People are still feeling the squeeze from energy prices. Amid softened consumer spending and private investment projections, the Atlanta Fed revised its Q2 GDP estimate to an annualized rate of 3.8%, down from 4.3%. Now, let us move to Asia. Investor sentiment across the region was also supported by expectations that AI-related spending will remain resilient even as economic growth moderates. Crossing over to Europe, the mood was different. While European markets participated in the broader risk rally, investors remained focused on growth concerns, monetary policy expectations, and energy prices. That brings us to perhaps the most important macro story of the week: oil. Middle East developments once again reminded markets how quickly geopolitical risks can alter investor sentiment. The timing is particularly sensitive. Central banks had been moving closer to a more stable inflation outlook, but sustained increases in energy prices could complicate that path. Higher oil prices have the potential to feed through transportation, manufacturing, and consumer costs, creating a fresh challenge for policymakers and markets alike. Let's talk about the 3 stories that defined this week's market conversation. First, SpaceX. The most anticipated IPO in stock market history is officially on the launch pad. The S1 has been filed. The NASDAQ listing under the ticker SPCX is confirmed. The roadshow kicks off on June 8th, and the amount expected to be raised? $80 billion. There are also reports that 78% of the money is already spoken for. But here's what you need to know before you get swept up in the hype. A successful listing would not only reshape the IPO landscape, but could become a defining event for global equity markets in 2026. While NVIDIA continued to sit at the center of the AI ecosystem, the biggest story may have been what happened around it. Anthropic reportedly surged to a valuation nearing $1 trillion after its latest funding round, overtaking OpenAI as the world's most valuable AI startup. This reinforced investor belief that the AI race is still in its early innings. The enthusiasm wasn't limited to software. The infrastructure powering AI became one of the market's strongest trades. Micron and South Korea's SK Hynix joined the trillion-dollar market cap club as demand for high-bandwidth memory chips continued to explode. Meanwhile, Dell's strong outlook highlighted another key trend. The global AI build-out is creating demand far beyond chip makers. So, what does all of this mean? Taken together, the week reinforced a powerful message. Capital continues to flow toward companies building the future. And yes, while innovation is still attracting capital, geopolitical risks are reminding investors that even the strongest bull markets rarely move in a straight line. 4 things to watch next week. Number 1. Donald Trump and the Iran MOU. This ceasefire extension still needs a presidential signature. If he doesn't sign, oil prices will rise. Again. Number 2. NVIDIA at COMPUTEX, June 2nd. Jensen Huang's keynote could move the entire semiconductor complex in a single afternoon. Watch it live if you can. Number 3. SpaceX IPO Roadshow, June 8th. We think the headline is enough to keep the eyeballs rolling. Agreed? Number 4. Europe's energy trajectory. If the ceasefire holds and Hormuz reopens, it could be the single most important positive development for the Eurozone this quarter. The market is pricing in a world where AI literally solves everything, and diplomacy saves the oil supply. It might be right, But history tells us that when two huge assumptions are both already in the price at the same time, that is exactly when one of them disappoints. If you want to know more about global investments, download the Dealing app and subscribe to our channel.